Then we should now move to the financial aspects of internal security and all those things. So here we'll basically deal with 2-3 things. First is the black money, then money laundering, and in money laundering we'll also see about that dynamic transactions and the recent legal remedies which have been found for black money and all those things. We'll dwell a lot into black money because that has been news since last 3-4 years. Okay, and especially after demonetization. See, that is the beauty of UPSC. Since demonetization has been very much in news, they will not ask directly about demonetization. And the control of black money has been cited as one of the very important reasons or one of the very important driving force behind demonetization. So indirectly, they can ask about black money. What is black money basically? Unaccounted money. Means ऐसा नहीं है कि black money is generated only by illegal means. The means might be fully legal or illegal also. For example, if someone is generating money from corruption or bribery, that is the black money being generated through illegal activity. Because corruption is not a legal activity, bhai. Please, howsoever may be the social acceptance or if peer pressure to indulge in corruption, it is still illegal in India. Okay. Now, legal ways, suppose buying or selling of a property, that is a fully legal way. And if you are generating, you are say showing a property, selling a property at a higher rate, but provide this property tax or this registration fee. Normally what happens is whenever you go to buy a land or buy a house, they say itna cash, itna black, they not only cash, they clearly say, sir, 10 lakh black milenge, 20 white milenge. How are they able to do this? See, your registration fee which you have to pay on purchase or sale of any property, that is based on the value of the property. Now, value of the property is defined in 2 terms. One is the market value, what is the fair market value of that property, and second is the circle rate. Circle rate, it means the rate which is officially declared by the government, specifically by the subdivisional magistrate of that subdivision. What is the land property rate of that subdivision? That is the circle rate, and that is normally less than the fair market value. So though he is selling you at fair market value, they pay the registration fee at the circle rate. Now suppose fair market value of any property is 50 lakh and the circle rate is only 30 lakh. So they'll show that they sold this property for 30 lakh, and depending upon the state, 1.5, 2%, whatever may be the registration duty, they will pay the registration duty as at the rate of 30 lakh. Now this remaining 20 lakh, this became the black money. Okay. So here, now selling and selling and purchase of property, fairly legal activity, but here a legal activity is used to generate black money. Okay. So don't think that black money is all generated through illegal activities, even by legal activities. Then we'll also see how this black money is turned into white. That is money laundering. Like you do laundry of your clothes. What you do when you do the laundry of your clothes? You clean your dirty clothes. Here you are cleaning your dirty money. So it becomes money laundering. So first let's talk about black money. Now, one white paper was, see, you may be seeing a number of figures about what is the amount of black money or a parallel economy which is running in India. There is no actual estimate or no official estimate of black money being circulated in Indian economy or the parallel economy because of very nature that it is undisclosed. Okay. So a white paper was published by the finance ministry in the parliament. So I'm giving you the definition of black money depending upon that white paper. So write down. Black money is defined as the assets or resources that have neither been reported The assets or resources that have neither been reported to the public authorities at the time of their generation, nor disclosed at any point of time, during their possession. Black money is defined as assets or resources that have neither been reported to the public authorities at the time of their generation nor disclosed at any point of time during their possession. Means either you have to report it during the time of your generation, or if you report it after generation, that you have, means through your, maybe through your income tax returns and all, or through these amnesty schemes which the government launches in between, about to report your unaccounted money, pay the penalty for it, and be scot-free. Okay, so either you should report it at the time of the generation only, or if you are in possession of such a money, you can report it afterwards also. But if you're not doing both of these, then those assets or those resources or those money is black money. Okay, now write down, black money can be generated through both illegal and legal activities. Both illegal and legal activities. So in illegal activities, you can write down drugs trade, terrorism, corruption, arms trafficking. All these are the illegal ways of generating black money. Because since you are generating it from illegal means, you are definitely not going to disclose it to the public authorities. The basic means characteristic of black money is not being disclosed to public authorities. Those are the illegal activities. Now in legal activities, you can write down hiding the income generated from legal activities from authorities. Okay, all those are the legal activities through which black money is generated. Why? Because though the income is being generated through legal activities, but it is not being appropriately reported to the authorities. Okay, so now next, see, although any activity, right from a small shop to a big business conglomerate, any activity can be used to generate a black money. Okay, but there are some sectors which are very much amenable to generation of black money. For example, the biggest sector, real estate, along with that gold, jewelry, bullion, all these trade, and another one, hawala, is like, it's not generating black money, it's transferring black money from one place to another. One very important source is the functioning of political parties or political funding, because as of now the political parties have to report their source of income or the donors only if the donation is more than 20,000 rupees. If somebody is donating less than 20,000 rupees at a time, then that donation need not be disclosed by political parties. Now, since lakhs and thousands and lakhs of people are donating to political parties, it can easily be broken down into quantums less than 20,000, which need not to be reported to the public authorities. That is also one of the very important sectors which is vulnerable to generation of black money, and that's why there has been demand from number of NGOs. Even Election Commission has said this, to lower this limit from 20,000 to say 2,000 or something like that, because lowering means completely eliminating it altogether might become impractical, because somebody donates 10 rupees, 20 rupees, They said lower this limit. Okay, we'll see all that. So important sectors vulnerable to generation of black money are, yes. That's what I said. Regularly now something might improve, but still there are a lot of gray areas in political funding. Even these electoral trusts which were envisaged, it was said that nobody should directly contribute to political parties. Rather, electoral trust should be there who will take contribution from individual persons, and in turn they will donate the money to political parties. But that also didn't find many takers, and it was a political trust, electoral trust. It was tried some 4 or 5 years back, but it also didn't help much. Okay, because the very basic nature is, until and unless there is political will for cleaning of this, it will be very difficult. And it is the political will amongst the politicians which is lacking. For example, do you remember? Even it was in the previous regime, or I cannot recall, when the Chief Information Commissioner, he said that the political parties have to be brought under the Right to Information Act. Because which agencies are there under Right to Information Act? They are the public authorities. Now, since a lot of government funding is involved in these political parties, the most important source is that they don't have to pay income tax. Now, it is equivalent that the government is foregoing the revenue, means the government is indirectly paying the income tax, means they are getting subsidy from the government or from the public. That's why, and they also get free airtime during elections, the registered parties, so the recognized parties. So the Central Information Commissioner, he said that these political parties have to be brought under the Right to Information Act. Now it was challenged in court. This order was challenged in the court, and the court also said that okay, they have to be brought under the RTI Act. Now see the zealousness of the political parties. It was at that time when continuously 2 or 3 sessions were completely washed out because of this number of scams. A few years back, if you might have been abreast with the news at that time, consecutive parliamentary sessions were washed out because the opposition was demanding constitution of a joint parliamentary committee and the government was not agreeing to it. Now 2-3 sessions consecutively being washed out, and in between the only legislative work that happened in the parliament during those 2-3 sessions was they unanimously amended the Right to Information Act and specifically placed a provision that political parties should be out of the purview of Right to Information Act. Now we always talk about a positive democracy and all those things. See, that is an example of such a huge cooperation between all the parties, unanimous passing of this amendment, and that too at a time when the only business that happened during those 2-3 sessions, it was this. Now that is, they have their own reasons. They say that if we bring political parties under RTI, means gradually not only financial aspect but other aspects. For example, if somebody is denied a ticket, he might file an RTI application of asking for the reasons why he was denied ticket. So they have their own reasons for that. But another laughable reason was that we have not kept our records in such a way that we can answer the RTI queries. Now whose responsibility is that to keep the records in proper way? You are getting the national parties, they even get the office space and the residence for the president and chairman and vice chairman of that party in Delhi at a highly subsidized rate. Now you are being given office space at the cost of the government. What are you doing in that office if you're not keeping proper records? That is the nature of lack of political will. It has been time and again cited as one of the reasons why this black money menace is not being controlled in India, because of the lack of political will. Now, demonetization as an attempt for controlling black money can be said to be an action which showed the political will of the ruling dispensation against the black money. How much is succeeded in controlling black money or not, that is a separate issue altogether that will be dealt specifically in your economics classes. But as the initial report say the impact on black money has been very less. But it certainly has its other benefits that are not in purview of today's discussion. So You have written down the sectors vulnerable to black money. All those real estates, land, jewelry, bullion, political funding. Okay. All these are the sectors which are specifically vulnerable to generation of black money. Now let's talk about how we are tackling this menace of black money. We are basically, we will see it in two steps. The first is the steps or the strategies through which we are controlling the generation of black money. The major focus should be that the black money is not generated itself. Now the second step or the second phase would be, if some black money is generated, how to control that black money. So write down, we have a four-pillar strategy to prevent black money. The four-pillar strategy to prevent black money. The first one is increasing voluntary compliance. Increasing voluntary compliance. First one is increasing the voluntary compliance. See, as we have seen, how is the black money being generated? The only one phrase answer is because the money is not accounted for or the money is not informed to the authorities. Now, if we create a situation, if we create an overall scenario where voluntary compliance or whatever money people are getting, they report it to the authorities, that will reduce the black money generation. Now, what are the ways of this? Write down. Rationalization of tax rates within this incentivizing or increasing voluntary compliance. First is rationalization of tax rates. Providing electronic services for paying various taxes. Okay. And the third one is making the tax laws easier to comprehend, making the tax laws easier to comprehend and comply. Making the tax laws easier to comprehend and comply. See, now if you join the IRS IT, there is a book this much thick, which are the tax rules of, currently they are teaching the tax rules of 2016. Every year new tax rules come. So that thick book, now that is the very Bible of say IT acts or IT rules in India. Now a person who is going to spend his life dealing about income tax. Now many of these IRS IT professionals, they also don't understand all of these acts, don't know all of these acts, okay? They refer to it as and when required. Now how can we expect a normal businessman who has to do this business also, how can he understand all these legal jargons related to tax and all? See, most of the people, so one of the biggest problem in today's tax laws with India is they are so jargonized and so difficult to understand that people, most of the people want to be on the right side of the law. They don't want to commit anything wrong. But because of the fear of all this jargon, many small time businessmen, these grocery owners, grocery shop owners and all, they are very wary of getting a TIN registration because they fear that once they register themselves with the authorities, then there will be checks, then they'll have to comply with so many things, then they have to prepare so many of reports and all those things. So it all needs to be streamlined. If a situation happens where people are told that, okay, you have to give this much money as tax, and after that you don't have to worry about such a huge number of reports and returns and all those things, it will be a very good situation. Okay, have you heard about this Laffer curve? Okay, Laffer curve is the bell-shaped curve where here we have tax collection and here we have tax rate. Means if you increase the tax rate, it starts from 0, if you increase the tax rate, it initially the collection starts, but after a point of time it declines. Why it declines? Because then people start evading tax. Okay, now similar type of thing can be said about these multiplicity and jargonized nature of the tax laws. So there are two things. One is tax evasion and the other is tax avoidance. Do you understand the difference between these two? Okay, so tax evasion is an illegal thing. Tax avoidance is legal, though there may be moral issues with it. Whether it means the government is itself giving you some ways by which you can reduce your tax burden. Okay, so that is tax avoidance. For example, there is a provision where any firm, any entity which is involved in research, means if the amount of money is spent in research and development, some part of it, depending upon the which sector it belongs to, some part of it is exempted from tax or it is tax deductible. Now suppose any firm, they don't have any proper R&D setup, they are running their R&D department solely for the purpose of reducing their tax burden, then it cannot said to be tax evasion, because the government has itself permitted that the money spent in R&D activities, it can be used to save the tax. But doing something solely for the purpose of saving tax, that can be termed as tax evasion. Sorry, tax avoidance. Okay, so we have to make these tax laws more and more user friendly so that people are tending towards more voluntary compliance. So that was the first thing. The second thing is reforming the sectors vulnerable to generation of black money. Means we'll have to focus on the sectors which are more amenable, which are more prone to generation of black money. So reforming the sectors which are vulnerable to generation of black money, all these sectors which we saw earlier. Okay, for example, in real estate there has been a proposal to use TDS, tax deduction at source, for real estate transactions. That can be one example. Real estate and all, they are coming under GST. So how it will impact is not very much clear yet, because the rates and all we are not aware, but it is a common agreement amongst experts that bringing this real estate under GST, it will improve the overall tax compliance in the real estate sector. Okay, so we have to focus on these sectors, or like we saw the example of electoral trust for political funding. Write down all these examples. Otherwise, the heading itself is self-explanatory. Electoral trust for political funding, tax deduction at source in real estate, reducing the amount of cash economy, reducing the extent of cash economy. Okay, because wherever there is cash involved, it becomes more prone to generation of black money. Within that sector, because cash economy is also a sector which is vulnerable to generation of black money, so within it also reducing the extent of cash economy, cash economy. Okay, second point, tax deduction at source in real estate sector. Tax deduction at source, TDS. See, it is one of the ways where the very moment you are generating some income, some presumptive tax is deducted at that. For example, if you work in any organization, there whatever salary you are taking, every month some amount of it is deducted in the form of TDS, tax deducted at source. Now at the end of the financial year, you have to file a return. Form 16 is there, which is provided by your employer, detailing how much tax they have deducted, what is your overall tax burden. You have to tell your employer that, okay, I'm investing in these things for tax saving and all those things. So they are deducing every month, some amount is being deducted as tax, and say, and at the end of the financial year, all of it is consolidated, and the last month's salary, depending, it might be the scenario where you might not have to pay any tax if you have properly invested, or some adjustment is there. And that's why, see, suppose a person with even a middle level executive, normally his tax means he pays 2.5 lakh taxes if he's working in any PSU or such type of organization. Now 2.5 lakh tax, if it is deducted in 1 or 2, say, last months of the financial year end, means it may be a situation that for the last 1 or 2 months you will not be getting any salary at all. But to avoid this situation, a regular this thing is there. And even in case of any contracts, if you are dealing with any government organization at all, beyond a certain point, if your contract involves payment of beyond a certain point, then the organization deducts the tax at the source only, and they provide you a Form 16 detailing you that you can, means that you can show in your income tax return that, okay, that is my tax overall tax liability, and I have paid that much as TDS as per the Form 16 attached. Now it will ease the tax compliance. Okay, so TDS in specifically in real estate and all those things, reducing the extent of cash economy, there you can give the example of your demonetization and all. Okay, now the next point out of the four pillars we are discussing, the next pillar is creating deterrence against non-compliance. Creating deterrence against non-compliance. So the first point was increasing the compliance. Here we are talking about creating deterrence about non-compliance. Here, whosoever is in contravention of the law, there must be surety of punishment or surety of him being caught. That will act as a deterrence, means some kind of disincentive for not complying with it. Now here we have to understand one very important general thing is, see, severity of punishment and surety of punishment. These are two things. Okay, one is that the punishment which is framed in the law is very severe. The other thing is that though the punishment might not be severe, but it is certain that if you are doing something wrong, you will be punished. Now, which one is supposed to act as a greater deterrence? Surety of punishment. Because if the punishment is very severe, like in India, the conviction rate is very low. Means particularly in case of criminal cases, the conviction rate is very low because of our we can say problematic jurisprudence system. And there is another thing, if the punishment is very severe, then the judges are also, they want to be doubly sure before awarding that punishment. Okay, for example, in case of say death penalty, now if anything goes wrong in awarding of that death penalty, that and if that sentence is executed, it cannot be corrected. So certainty of punishment, that was a very important issue at the time of this Justice Verma committee report, because everyone was crying for severe and more severe punishment. Okay, now the punishments are severe. Suppose has it been the situation that severity was a greater deterrent? Now, which are the countries which undertake maximum execution? Number one is China, Saudi Arabia, then these Gulf countries, very severe punishment. If you are caught stealing something, you might get your arms chopped off. Even public executions. Okay, so and these Scandinavian countries, very minor punishments. I mean, they more focus on the reformative thing. And the crime rate, if you look towards the crime rate, in the Scandinavian countries, it is way less than all those countries. Okay, there are certain different social and economic reasons also for that. But had it been that the severity of punishment ensuring a deterrence, then these countries, they would have been having very low crime rate. These are the reasons which are cited at times, because this death penalty debate is also a very prominent debate in India and world over. Okay, so these are the say arguments which are given in favor of abolition of death penalty. Okay, there are many arguments in favor of death penalty also, but what I want to say here is you have to be very sure that surety of punishment should be there, and at times this severity of punishment acts against this surety of punishment, because judges want to be doubly sure, and they, agar suppose someone has to give only financial punishment is there, okay, or the offense is compoundable offense, then it is a very fast process, and the number of cases will also get reduced. So here, for deterrence, always remember there should be a surety of punishment. The next one is, the fourth is miscellaneous actions. For example, creating public awareness, improving the quality and accountability of auditors. Okay, then in the miscellaneous ones, you can write down creating public awareness, enhancing the training, enhancing the effectiveness and accountability of auditors. The next one is judicious use of amnesty schemes. Judicious use of amnesty schemes. The last one, miscellaneous one. चार ही तो pillar है. बाकी जितना है वो सब miscellaneous में. Okay. Judicious use of amnesty schemes. What are these amnesty schemes? Where the government regularly comes, if you are having black money, disclose it, and barring some specific conditions, you will not face any prosecution. You just have to pay the tax and some penalty, all those things. So, but here always write, don't write using amnesty scheme, judicious use of amnesty schemes, because if you give amnesty schemes on a regular basis, it might act as a disincentive for voluntary compliance, because people will think, let's hold the black money. At some point of time, say 4 years, 5 years down the line, some scheme will come and we will just clean all this money. That is the similar thing happens with these loan waiver schemes. Loan waiver schemes, they act as a disincentive for the the law-abiding people who are regularly paying their loans. Okay, so always use the term judicious use of amnesty schemes. Okay, so these are the strategies through which we can reduce the generation of black money even at the source. Now the next phase means, suppose howsoever foolproof we design the system, some black money will certainly be generated. Now, so the next step is how to curtail, means if some black money is generated, how to tackle that money. The next one is steps to tackle black money. Steps to tackle black money. Here we'll be majorly discussing the steps which have already been taken place by the government, which have been already taken by the government. So you can also use these, the points which we are going to discuss now. So you can also use these whenever they ask that, what is the government doing to handle this black money menace? Okay. So the first one is aiding in international efforts, or joining the international efforts. See, because this black money scenario, it is way beyond the boundary of any one country. Okay, we regularly see the Swiss bank and all those terms being used, because it goes beyond the boundary of one country. That's why this handling black money will need a global cooperation, and number of mechanisms have been designed for this. Write down, the first is joining international efforts. Within that, write down what international efforts we have joined and all. First one is FATF, Financial Action Task Force, FATF. India joined FATF. India joined FATF. India joined FATF in June 2010. June 2010. So just write one line about FATF. FATF is an intergovernmental body. FATF is an intergovernmental body involved in framing policies, to combat money laundering and terror financing. To combat money laundering and terror financing. Okay. So it is an intergovernmental body. Number of bodies are coming together which discuss and they design policies which can be emulated by the particular member countries. The next organization is Task Force on Financial Integrity. Task Force on Financial Integrity and Economic Development. Task Force on Financial Integrity and Economic Development. Okay. See, FATF was an intergovernmental organization where different governments are coming together. Now, this Task Force on Financial Integrity and Economic Development, it is a collaboration of civil society organizations. It is a collaboration of civil society organizations and governments. Means here, civil society organizations are also here in the scenario and they are also being involved in it. Okay. Civil society organizations and governments. See, number of NGOs, they are involved in this. For example, Transparency International and all those things. Okay. This Task Force on Financial Integrity and Economic Development, its another name is Financial Transparency Coalition. Financial Transparency Coalition. Financial Transparency Coalition. Okay, these two, and another organization is Egmont Group. Egmont Group. EGMONT. See, every country has a FIU, Financial Intelligence Unit. Okay, like in India we have FIU-IND. What is the purpose of this FIU? This FIU is involved in gathering intelligence related to financial aspects. Okay. Now this Egmont Group is a grouping of these FIUs of different countries. They share information amongst each other. They share the best practices amongst each other. See, Egmont is the name of a palace in Brussels. At that palace, this meeting first took place. That's why they named it as the Egmont Group. So write down this Egmont Group. It is a grouping of financial intelligence units, FIUs. It is a grouping of financial intelligence units, FIUs, of different countries. It is a grouping of financial intelligence units, FIUs of different countries, which involve in sharing informations and best practices amongst each other. Sharing informations and best practices amongst each other. Okay. FIU-IND. It is the name of the organization's name is FIU-IND. No, not that some other designation, some other organization designated FIU. So from India we have FIU-IND. Okay, these three are majorly important: FATF, Egmont Group, and that international. Other than that, write down Eurasian grouping, Eurasian group. Eurasian group. So it is a group of Eurasian countries. Asia Pacific group against money laundering. So if you can remember the name of the first three and their activities, that is sufficient. Other than that, write down these two also. Okay. So that was the first point in tackling black money, means international cooperation. The second heading you write down, developing legislative framework. Developing legislative framework. Means we need to develop proper legislative framework within the country to take care of these things. In that, write down a few examples. Tax Information Exchange Agreements, TIEAs, Tax Information Exchange Agreement, Tax Information Exchange Agreements, TIEA, Tax Information Exchange Agreements. To gain information about tax defaulters which try to gain information about tax defaulters which try to seek refuge in other countries. Okay, which try to seek refuge, tax defaulter which try to seek refuge in other countries. The next one is double taxation avoidance agreements, DTAAs, double taxation avoidance agreement. See, what is this double taxation avoidance agreement? Is that when, see, now if some entities, even individuals or firms, they are doing business, they are stationed at some place else and they are doing business in some other country. Now, in order to avoid a situation where they might be taxed by both these jurisdictions, we have double taxation avoidance agreement. It ensures that the businesses, the groups, the firms or the individuals, they are not taxed twice for the similar activity. But it has been misused by many individuals in the name of round tripping. Okay, it is been reported by many that most of this FDI coming to India, it is the Indian money itself coming through some other jurisdiction. The most notorious ones are Mauritius, Seychelles, Singapore, and all that. See, there is one building in Mauritius which is providing about a single building providing about 50 to 60% of FDI coming from that region. Okay, because there is no economic activity as such going in that building. Only that building houses one room offices of many companies. Now, the money which is generated in India, that is because they have registered that company in Mauritius. So, and Mauritius is governed by the double taxation avoidance agreement. We have amended it. We'll see that right now. What were the amendments? So, Mauritius has, so they can pay tax in any of the one country, not in both, be it Mauritius or be it India. Now, because Mauritius is a tax haven, what does a tax haven mean? It means that the tax rates are very low, so almost zero. So they say that we are paying tax in Mauritius, so we will not be paying tax in India. And they are paying tax in Mauritius, no doubt about it, but that tax is practically coming to be zero. So because of all these activities, we have also amended our DTA with Mauritius. Now, gradually, means in a gradual manner, we will be taxing those businesses also. And for taking benefit of that DTAA, we have said that you must incur a certain amount of administrative expenditures in Mauritius itself. Because if you are saying that you have a firm, you have registered a firm in Mauritius, that means you are saying that we have legitimate business, we are doing business in Mauritius, and you have only one single staff in Mauritius. How are you doing business with that one staff? Certain amount of administrative expenses must be incurred for proving that you are a legitimate business registered in Mauritius. That is all about the amendment of DTAA with Mauritius. Now, similar situation is going on with Singapore also. But you might not have heard the news about amendment in Singapore DTAA. Why? Because Singapore DTAA has one very beautiful clause. They say that whatever will be the terms with Mauritius will follow the similar terms. Jo bhi lana, do lana types. Okay. So since we have amended the DTAA with Mauritius, that means now practically Singapore we also have taken care of. So just write down one or two. You have understood this whole DTAA, this round tripping thing. To India, because they are doing that business with India. Had they not faced that, had they not been protected by DTAA, we would have gone that revenue. We would have got that revenue. We are losing that revenue, and if we lose revenue for some legitimate purpose, we don't have any problem with it. But they are simply fooling the Indian authorities. That's why we want now to tax them. Okay. So you have understood this whole thing. Just write down one or two lines. DTAAs are arrangements between two countries. DTAAs are arrangements between two countries which aim to avoid double taxation of same income, in two countries. Okay. Write down the next line. But these DTAAs have been misused by businesses in the form of round tripping. Through tax havens, round tripping through tax havens. Okay. So this noble purpose has been defeated. Write down in the next line. That's why India has recently amended. Its DTAA with Mauritius. And other renegotiations are in the pipeline. Okay. समझ गए? ये ऐसे होता है, भले आदमी को लोग बेवकूफ बनाते हैं. So the next thing is we are planning to declare, or just इतना मत लिखो, declaration of some countries as non-cooperating countries. Declaration of countries as non-cooperating countries. See, we might demand some information from certain jurisdictions for the purpose of our own assessments. Now, if any country is involved in hiding of this information, if we are asking for information about Indian citizen only, and that is within the precincts of the international practices, the international norms, countries should give that information. Okay, but if any country is not means if they regularly deny that information, we have amended our Income Tax Act to declare such jurisdictions as non-cooperating jurisdictions. And we might also make put some sanctions on that. Means like businesses from that country, they might face some extra tax, a different level of withholding tax. That things we are doing. So write down the Income Tax Act. The Income Tax Act has been amended. The Income Tax Act has been amended by insertion of Section 94A. The Income Tax Act has been amended by insertion of Section 94A. Through which we can declare certain countries as non-cooperative jurisdiction. Through which we can declare certain countries as non-cooperative jurisdiction. Okay. Now write down what will be the repercussion of declaring this. Write down transactions with residents of such countries. Transactions with residents of such countries will face some disincentives. Okay. So one of the country which has been declared a non-cooperative jurisdiction is Cyprus. That is, Cyprus has been declared as a non-cooperative jurisdiction country. Okay. That was the next thing, legislative framework. Now another thing is write down the institutional steps for dealing with black money. Institutional steps is what institutions we have built up for that. Institutional steps for dealing black money. Write down the first one is Exchange of Information Cell, EOI cell. Exchange of Information Cell, EOI cell. Information Cell. Under the Foreign Tax Division of CBDT. CBDT is Central Board of Direct Taxes. Okay. Now, suppose some information is being sought from some foreign country, or we are seeking some information from some country. Now, it was seen that there was duplicacy of efforts going on in this exchange of information. That's why under the Foreign Tax Division of CBDT, we are framing a dedicated exchange of information cell. The sole purpose of this cell would be to provide information which is sought from some foreign country or seek information from that country. Suppose SEBI wants to get some information about any entity which is, say, registered in any foreign exchange, Dow Jones or any exchange. Now earlier what was happening was CBDT will transfer that when asked, and multiple channels of this exchange of information was going on. Now any agency which wants to seek information regarding the taxation and these financial matters, they simply have to pass their request to EOI cell. Now from further which agency in foreign to contact or how to get that information, that will be taken care by the EOI cell. That is simply to smoothen the process, to expedite the process. Okay. First one is the EOI cell. The next one is Income Tax Overseas Units. Income Tax Overseas Units have been set up. Income Tax Overseas Units have been set up in Indian missions abroad. Indian missions abroad. Income Tax Overseas Units have been set up in Indian missions abroad to ease out the process of information exchange. See, any embassy or high commission or consulate which we are having in any foreign country, it houses not only diplomats but number of other officers. For example, there might be a finance attaché, there might be a navy attaché, there might be a military attaché, and all those things. Okay. So likewise, we have now set in, I think in 10-12 countries, 10-12 missions we have put out where income tax overseas units. Do you understand the difference between embassy and high commission? Some might have heard that embassy, for example, embassy of United States, but we don't have an embassy of Pakistan or an embassy of Australia. We have high commission of Australia. Abdul Basit? Yes, exactly. The countries which are a part of Commonwealth, we have high commissioners or high commissions, and other countries we have embassies. Consulate. See, there is one embassy of country. Okay. Now the ambassador or that is the main center. Now for any foreign relations and all those things will be dealt by the embassy. Now if there are a number of interactions between the two countries, for example, if the people going out in that country are more, so we need to issue more number of visas. So consulates are opened at different places within the same country to ease out this burden of auxiliary activities. For example, see, providing visa, though for us common people, that might appear at the sole purpose of having an embassy, but that is one of the auxiliary functions. Number of other functions, important functions are there. So to ease the burden of the embassy, there might be number of consulates. For example, we have consulates there might be consulates in Mumbai, in Calcutta, because huge number of people are traveling from Mumbai to foreign countries. Okay. Now, because for visa, you might have to come for submitting of documents, for some visa interview also. Only for the sake of getting visa, somebody should not be forced to travel to India to Delhi from Mumbai and faraway places. That's why consulates are there. Okay. So mission is like a common term for all this. An embassy, a consulate, a high commission, all those are simply missions abroad, missions. Okay. So we are having this income tax overseas units and all those things. Another step is in all these things, which we have already discussed, in order to curtail the use of the involvement of black money. In order to curtail the involvement of black money in political funding. In order to curtail the involvement of black money in political funding, electoral trusts have been set up. See, this scheme, it was started in 2013. What is an electoral trust? An electoral trust is simply a body. The sole purpose of that body is to disburse funding to political parties. Now, if any big conglomerate, a big corporate group, they need to provide some funding to political parties. Either they should directly give it to the political party, or they can provide it to an electoral trust, and in turn that electoral trust will be doing the function of disbursing that money to political parties. It has along with bringing this transparency in how much money is being disbursed to political parties and everything, a person might suppose any group, say Reliance, he might not be interested in disclosing how much money he has given to which political party, because suppose he gives more money to certain political party and that party loses elections, and the other party comes to power, and if they are aware of this fact, they may take vendetta from that group. Okay, we want transparency in the thing, that how much money is coming to political parties and how are they spending that money. For that purpose, whatever money is coming to the political party from an electoral trust, that will be very much clear and we can handle that. But a person might want to give money to any political party without disclosing it, to which political party he has given. So that also can be done through electoral trust. So write down 1 or 2 lines about electoral trust. Electoral trusts are supposed to be non-profit company under Section 8 of Companies Act 2013. supposed to be non-profit company under Section 8 of Companies Act 2013. Okay. Their purpose is to ensure orderly receipt of voluntary contribution from an entity and distributing the same to political parties. So another important thing is these electoral trusts, they cannot receive any contribution in cash. Electoral trust cannot receive any contribution in cash. Electoral trust cannot receive any contribution in cash, and along with that, they cannot receive the contribution from foreign nationals. Not in cash and not from foreign nationals. Now these electoral trusts, they can also avail the tax benefits. Electoral trust, write down. Electoral trust can also avail the tax benefits. Electoral trusts can also avail the tax benefits, but only if the trust distributes 95% of total contributions. But only if the trust distributes 95% of the total contributions in the same financial year itself. Means whatever contributions come in any fiscal year, 95% of that has to be distributed in the same financial year. Only then they will get the tax benefits. Okay, they might choose not to distribute in the same financial year, no restrictions on that, but they will lose the tax benefits then, because all these contributions which are coming. See electoral trust as an entity or as a company registered under the Companies Act, all the contributions which are coming to the electoral trust, they are like the receipts for that company, if you talk about that entity. Okay, now on the receipts they'll have to pay the income tax. Now if they want to be exempted from, or if they want to get the tax benefits, they have to disperse at least 95% of those receipts in the same financial year, then they will get the tax benefits. Okay, electoral trusts are functioning, but they are not find many takers, because there is no compulsion that you have to compulsorily route your contribution through electoral tax. That is one of the routes provided. There is no, means even if you want to contribute directly, you can do that also. So electoral trusts are functioning, but they have not find many takers. See, the issue with Swiss Bank is, it is not any illegal thing per se. Okay, first we have to understand two things. That if you are depositing some money in a foreign bank, that is not illegal per se if that money repatriated to any foreign bank is within the limit prescribed by RBI. Okay, limit means the RBI prescribes limits how much money can you remit every year. Currently it is $25,000. Okay, now if you are within that limit, it is perfectly okay. But the problem is that the Swiss bank, because of its very nature, they do not disclose the information about their customers. Okay, and opening a fictitious account or opening account in the name of, say, some like a Benami property like a thing is very easy, because they are not very much compliant with KYC norms, whatever may be calling that in Switzerland. So the first issue is the opaque nature of the dealings of Swiss bank. Okay, that's why see ऐसा कुछ नहीं कि स्विट्जरलैंड में बहुत अच्छा कुछ है इस वजह से लोग जाते हैं. That is a different thing. But people deposit their money in Swiss bank because they have this confidence that Swiss bank authorities, when asked by the tax jurisdiction of their own countries, the Swiss bank authorities are not going to disclose the information about their bank accounts. That is why people deposit in Swiss bank. Now, it has been alleged that many big politicians and industrialists, they have their account in Swiss bank where they are hiding their black money, because that will not be told to the Indian authorities. Now they are also, because of this global pressure, and Switzerland being means one of the big economies in the sense of they are developed countries, they are considered to be responsible country. Now under this international pressure, the pressure of the OECD and all those things, they are gradually becoming more and more open in their dealings. They are answering the queries which the tax jurisdictions across the world are asking. So that's why we see some information which banks have provided to the Indian authorities also, which was given by the government to the Supreme Court in a sealed envelope with a condition that it will not be disclosed yet, because the number of investigations regarding that are going on, and see, Supreme Court asks something, they have to give, but that information becoming public, it might create hurdles for that information. Okay. Now you got it, the Swiss bank. Another similar issue was about Panama Papers. For a long time, it was in news, specifically in Indian Express, because this Panama Papers investigation, it was done by a global collaboration of journalists, in which the Indian journalists, they were from the Indian Express. Okay. See, there was a firm called Mossack Fonseca. Mossack Fonseca was the name of the firm, which was a law firm in Panama. Now, Panama is a tax haven, very low tax rates. Now, Mossack Fonseca was a law firm. So that law firm, they were doing? They were providing consultancy to the companies which wanted to register themselves in Panama. Okay. As such, it was not an illegal act. That's what the then RBI governor, Mr. Raghuram Rajan, time and again he made this statement that all the people whose name is coming in the Panama Papers are not criminals. There might be a situation where, see, the RBI itself has allowed you to repatriate money and open ventures outside to provide some investment, to do investment outside. Okay. So there might be also a situation where someone using purely legal means, he might have opened any office, he might have registered a business entity in Panama. So in the name of this, all this hullabaloo, nobody should understand that all the names which are in Panama Papers are of wrongdoers. Okay. So what was happening was, this country was, Mossack Fonseca, it was providing consultancy for opening of firms or registering business in Panama. Now, a number of names of Indians were there who registered a business in Panama. Now, registering a business in Panama is not illegal per se, but if you have not informed the Indian authorities that you are opening a business in Panama, or if your investment per financial year in that business entity in Panama is greater than the limit prescribed by the financial regulator, that is the Reserve Bank of India, then if you have not paid the tax for that money, because suppose you are saying that I have invested $25,000 in Panama. Now you'll have to show that $25,000 you earned in India. Now, two things you have to do. First, you have to show how you generated that $25,000, whether it was a legal activity or illegal activity. And even if it was through illegal activity, then by default you are wrong. Now, even if it was through legal activities you generated that money which you invested in Panama, even if it was through legal activity, then the next question comes, have you paid your tax for that in India? Because you registered that business entity. Now, whatever business that entity is doing, that you might say that, okay, I'm paying tax for that in Panama, which might be a zero tax or a very low tax. But the investment which you are doing in Panama, that amount of money which you earned in India, but investing in Panama, it has to be ascertained that you have to pay tax on that income generated. Now, if you are within the limit, if you have earned the income through legal activities, and if you have paid tax for that activity, certainly there is no problem in it. You are perfectly in compliance of the law and no actions can be taken against you. That was the issue of, this is the problem with all this media trials and everything. Even before someone is proved wrong, they paint him as a wrong person. So having a Swiss bank account or having money in Swiss bank account or having a entity registered with the help of Mossack Fonseca, the name coming in Panama Papers, it is not wrong as such if you are compliant with other means. Okay, I understand this about the Panama Papers also. Good. So other these things involved in this political funding. For that we have to go for electoral reforms, which you might have dealt in your polity class, not actually pertinent here. Bond? Electoral bonds. Electoral bond and electoral trust, they are different things as such. The only commonality which can be said is that both of these are ways to clean or to make the political funding thing or electoral funding thing transparent. Okay, nothing is that electoral bond might be sold by electoral trust or something. Both are different things, similar in the manner that the purpose of both of them is to make political funding and funding of political parties more and more transparent, more and more accountable. Led to coming of this. Yes, we can say that. Whether it will succeed or not. Definitely. See, for the success of any, like I said earlier also, you may bring number of schemes for cleaning of this political funding thing. But unless and until you don't have the political will or appropriate regulatory and strong legal measures to ensure that political funding is clean, number of schemes, they are merely eyewash. The government is simply trying to involve in the activity of face saving, that we are doing something about electoral funding and all. But we see number of things have been done, but that perceptible change is yet to come. Okay, definitely it can be said that since the one scheme went the similar fate, so another scheme on the same line, it also meet the similar fate, unless it is not implemented in true rigor, unless it is not implemented with strong political will. Okay, so these were important things about black money. And black money, if you have time, read the executive summary of the white paper of that black money presented in the parliament. Other than that, most of the general things are there. Be restrained in your reading about black money, because huge amount of material is there, specifically in media reports and all. If you are reading something about black money, don't involve in reading of this sensational news and all that. No need to know how much black money, who is stashing, all those number of zeros, very flaunted very much. No need to do that. You have to basically focus on the policy level issues, how it is being generated, how it can be handled, what the government has already done in handling. Okay, so now since we have now generated black money, let's now make it white.